All right, guys, welcome to the last Zoom of the month, August 30th, pre-recorded Zoom. Okay, just gonna start off H4 here. We know what our bias was, at least for the short medium term, as of last week, which was, our previous highs, or our previous daily high here, which is a significant high. And just like I always say, we don't necessarily know what's going to happen after we take liquidity, but the only thing that we can assume, at least for the short term, is which liquidity point we will pursue. So based on that, you guys know that we were essentially bullish after a bullish liquidity grab here. However, we did not necessarily get any type of recovery here, so the bullish bias is now a bit iffy. The only reason why I'm saying that is we had relative equal highs was taken, but there was no true structure point here outside of maybe trying to assume this as a structure point, but that would be minor intraday at best. However, with that being noted, if you are to note that, then realistically, after we took our daily high, we know that we are now within a bearish liquidity grab, just because the immediate continuation did not happen. On top of that, we did not get a substantial new high. It was just taking liquidity and then a reaction in the opposite direction. And not only that as well, but if we're looking at this from an order flow perspective as well, we can see here that we have order flow disruption to the downside. So something that I'm noting here, I don't necessarily want to fully switch my bias, but there is order flow disruption there. The only thing that this could be bouncing off, I believe, is in H4, H4 inefficiency, and there even might be a massive wick and candle to the downside, but that isn't necessarily something I'm too biased on, with this being a bullish zone to the upside. So the only thing that's really sustaining this from creating new highs would probably be this relative POI here, based on a 2-hour inefficiency. We do know that there is an H1 candle that really stands out there, so I'm really going to be seeing what happens there. But in terms of the internal sense, we know that there is, obviously bullish structure and bullish order flow, where we had an M15 SC take out preliminary structure, which is in alignment with the previous swing momentum, meaning bullish. So we know that based on, as of now, we are technically bullish. So the only thing here, I do see this continuing higher, at least for the short term. I do see this continuing higher, but what happens here is going to be a very, very important, area, for the next week. And the only reason why I'm also trying to kind of lean on a bit of a bearish recovery after, and essentially not necessarily unwillingness, but an unsubstantial new high, is the extremely bearish closure after we took liquidity. So as of now, the structure is technically still bullish, but how we react in this premium is really going to dictate whether or not we continue higher. And that would obviously be just as the same thing with EURUSD, because the issue with EURUSD is pretty much identical to DXY, where we were anticipating the continuation to the downside, but we did not create a substantial new low. We created, obviously a minor / major intraday low that was taken, but we did not take out the full swing point. However, this one looks a lot more bearish than this looks bullish in my eyes. Just based on this, if I'm really just going off of what I see here without acknowledging DXY, I see a lot of relative equal lows there, and I see relative equal lows here as well. Yes, that is a quote-unquote mitigation, but these are relative equal lows, and these are also relative equal lows based on a previous low there. So I would not be surprised just by looking at this if this will potentially come lower to sweep that before, you know, either we bounce off of the counter POI, which is, excuse me, relevant because this is basically this, right? However, you guys do know that these are not perfectly correlated. So let's say we might hit the POI here, but that might mean for EURUSD we take full liquidity out and then we have some sort of transition to the upside. A bit ugly, but that would make a lot more sense to me, and that would really justify more of that reversal sense. But just by looking at EU, it really looks like this might want to continue lower. Yeah, especially after inefficiency bounce here, we did not reach the wick of interest. So this is definitely an area that stands out to me, is a wick of interest, seeing if that will tap. Just based on what I'm seeing here, and then potentially take out relative equal lows here, and then seeing what happens in that discount, whether we take the full liquidity, we continue all the way lower, or if we have, you know, some type of bounce. But AUDUSD, this one kind of almost nailed it, I guess, just because we were anticipating the recovery back into previous structure, and this one, you know, I guess you could say it was relatively perfect. So this one was definitely very interesting. I was seeing this morning, right around here, I believe. This was what I was looking for, seeing if we could get some type of bounce here, but there was really no bearish transition here. It might have not been there, actually. I'm looking at, no, it was here. Actually, no, I was looking at this. Relative zone of interest. This is something that's also interesting too, is testing out whether or not a POI will sustain itself. One, this was a, you know, just taking out the full POI, and then here is where we see the recovery into inefficiency continue lower. However, that is a micro continuation BOS, so this was a justified bearish scenario. Just something I was looking at this morning. Seeing if there's any type of model in regards to breaking through a valid POI and then seeing some sort of bearish transition and then sustaining itself with order flow to generate, you know, a very good continuation. But there would be many catalysts to this. For example, this only works not because it's a failed POI, but because it's supporting the narrative that we were talking about last week. So it was essentially a scalp continuation based on a minor/major intraday continuation to the downside. So just something to think about. And there was something I was looking at with EURUSD today, and I believe I saw a couple of people also looking into this, was essentially trying to buy here, which is something I wanted to take. I didn't. I don't have. I took a screenshot when we were like here, and I was seeing if we could dip down again and then continue. However, the only thing here that I did not like is that we created a solidified low, right, into a new structural range, and this bouncing off of order flow, right? This order flow then takes out previous structure, meaning this is still bearish. Why? Because let me change the color. This continuation move to the downside, and we know that we are bearish on the overall scheme of things. So in order for me to take a buy here, you would need, you know, a bullish transition. And if you don't get that bullish transition here, then you're trying to catch a low based on a continuation BOS that's in support of, you know, the overall narrative that we were talking about last week. So pretty interesting. And I know you guys see why that potentially would not have been a favorable outcome. But just remember, you know, if you do create solidified lows and then you hit the POI again, then you technically need a type of transition in order to justify why you're going to come back up here. But without a reasoning, then you're just trying to catch a bottom. But yeah, with that being said, I will see you guys on Friday.